Guys, welcome back. Hope you had a great week. Pretty much from what we spoke about last week, we continue to the top of this channel and we're kind of just stopped there. Both the scenarios that I had originally spoken about last week, they still exist. We haven't really done much. We did continue, so bulls obviously have the upper hand. But if I go to the chart of wicks, you'll be able to see that again, we've gapped up this week. I did discuss how if we did kind of come down into this support level and we did bounce, then we would still kind of be bullish. You can see here we did open up. That's kind of the level. You break below 18 and you can very easily go long the market. But as long as VIX is again continuing to get defended and push back over 19, then that's again a sign to be cautious, right? I'm not saying we can again sell back down. I'm just saying we need to be a little more cautious than be blindly bullish in where we are in the market. Even the 10-year are kind of sideways. We haven't really done much from last week.
This short clip is presented by Chase. Fast track your learning curve and profit with our LaDuc Trading Slack community. It is ideal for beginners who love the chase. Chase provides access to not only Samantha's daily market thoughts and chase trades, but also her fabulous team of live stage mentors who share their actual trades and risk management stops across equities, options, and futures. You also get access to custom trade support when you need it. For more information, visit www.laductrading.com/chase.
We look at the dollar again, for example, we again are consolidating sideways. We haven't done much, and we have spoken about how dollar could have a bigger picture bullish pattern to 108. So any sell-off could get bought. So again, that is something to be cautious about. And given where we are in the market, it won't be a surprise if we, continue to go sideways and hold above this breakout region from the prior high before elections, before the market kind of decides what to do. But yeah, all we can do is play it level to level and wait for earnings season to kind of pop out. So yeah, as discussed last week, our levels to watch out for example, you can see here this 495 that we discussed. You can see here we try to break out and we immediately came back in and we're kind of just against that, and we are kind of opening weak. So yeah, this is your pivot for upside momentum. You break 495, we know bigger picture. This is our channel that QQQ is in. You break 495, we should be able to hover to the top of the channel pretty easily. However, you reject here, this is very likely still very much plausible to be an ABC pattern, which could have a lot of downside risks. So yeah, kind of an important pivot level, and confirmation for a breakdown would be a break of 475. So yeah, so while we, digest 495, 475 before market makes a decision, it's not really, we're stuck in this $20 range for now, I think, till we break either level. So similarly, if we go to SPX, you'll be able to see that for upside momentum, we would need a break of 5865. You break that, we have room all the way to 6,000, 6,200. Honestly, this would end up being the upside would end up being a 1, 2, 3, 4, 5 with a lot of momentum, right? But yeah, you can't forget the downside risk factors, and generally what has happened every time we've had a massive sell-off. So you need to keep all of that in attention. And again, what happens every time we've come to the top of this channel, we again have sell-offs. So yeah, though we've broken out of this weekly channel, it is very much at risk to come back to the downside, given broader structure of the market. You zoom out, every time we do kind of have a breakout, eventually it does fail and come back to the inside. So yeah, even if we do break out, it is longer term picture due for a very massive correction down. So you still need to be aware of that and not, just assume we're just going to keep going up. So yeah, these are the two patterns I am looking for. And those are my bullish and bearish pivot levels. So for SPX, above 5865 bullish, and I would say confirmation of a breakdown. I would like below 5733. Like, I think till here would again just be consolidation before the market kind of decides what's next. But yeah, crucial area in the market. So watch out for all these levels that I mentioned. With all that being discussed, let's look at this. Is watch this. So I had LLY and it didn't really work well the last time, right? We didn't really do much, and we're pretty much popped right back into resistance and rejected it. So we are at a crucial level. So this could flip both ways. This is the box. So if we can, you can see here, this is the downtrend channel. If this does hold a support and we can break out of 930, then you'll be able to see 975. But this had a fake breakout. So I am, and it does, again, keep in mind, have a gap to fill at 786. So I am watching to see if it breaks, let's say, 910. If you break 910, I think very easily you should be able to come down to 880 and maybe even 850. So watch for this box. Whichever way it breaks out, it's due to have an explosive move, but I'm hinting more bearish than I am bullish. Yeah, so that's what I have for LLY. The next one I have is TWLO. And the reason for that is, again, this is hinting at a breakout, right? You can see here. However, this is a more bullish structure, right? Because you can see it's trying to form a base at the bottom versus LLY. You can see it's trying to form kind of distribution at the top. So it's kind of the difference. And you can see here that we have broken out. So we would, again, need to hold over 68 to continue the breakout further into 75, 78. And if you fail 68, you can see here this was the channel. We're very likely going to come back to the bottom of the channel. So 68 is kind of important on TWLO. Look to see that given that it's kind of had an inside week, this week should have a little bit more moves on TWLO. So yeah, that's what I have for TWLO for levels. The next one that I have is Google. Again, the reason for that is, again, we are kind of finding resistance. You can see here we've kind of been sideways for 4 days, and we are rejecting the 0.5168 level of resistance. So again, we are stuck between 168 and 162.7. So if we do break 162.7, I do think Google comes back all the way to 155. Again, we are kind of stuck in this box range. We break 168, we should have a lot of upside momentum into 180. And you can see we've pretty much been sideways for 4 weeks. So this week should have a bit more move. I mean, I know it has earnings. This is next week. So yeah, it could. Let's see if we have that sell off to retest support before earnings into 155.70. That's more likely what I'm leaning towards. So that's what I have for Google. So yeah, if we do fail 162.9, we'll likely test 159 and even 156. Yeah, that's what I have for Google. And last but not the least, what I have is OXY. Again, we do need to hold, it is very important that we hold these lows on OXY. This is our chart, and you can see here, this came down all the way into 51. We're trying to break out, and 58 is the fib target that if this is an ABC, we should be able to push into, and 51 is a must hold. So yeah, this is an ABC pattern if it follows through. If it failed 51, then we retest 49, 48 pretty easily. So yeah, that's all I have for this week. I hope you have a great day.
Subscribe to LaDuc Trading YouTube channel for more Wolf's weekly wave list videos and other content.